Hello guys, welcome to Forex Trading Strategies. You can see it's been over a month that we uploaded the last video. Now I've been caught up with so many things that I'm trying to settle right here with me at my own end. I thank you guys for the calls, for the messages, for reaching out and all of that. I am very grateful and I appreciate all of your concerns. Now we are back, fully back to business. Now in this video I'm going to teach you how you can avoid the spikes or survive it. Okay, now the spikes are very insistent while trading. Okay, it just happen. Now this thing, they are simulations, they are programmed, they are code, so there's no how you are going to dictate 100% of the spikes. Now if you're able to dictate up to like 70, now the rest of the 30%, then you learn how to swim with the tide. Okay, you learn how to survive it so that it will not crumble your trading account or capital. Now that being said, let's head back to our chart and let's see how we are going to survive it. Now for example, let's check this out. Let's say we have this chart before us right here. Let's say we are in a trade. As we know, this is the non-repaint indicator. Okay, this is the non-repaint indicator. I'll go ahead and dock it out so we can have a bigger screen. So dock, so I'll maximize it. Okay, this is pretty awesome. How are we going to do in this kind of situation? This is the live chart right here. This is crash 1000, and we all know that the normal movement of the crash is going up. Okay, it goes up for some time, then the crash happens, then it comes down. It goes up for some time, then the crash happens, then it comes down. But how it keeps on occurring like this, how are we going to manage to survive it? Okay, now first thing we need to know is using this indicator. It was never about this indicator anyway, but use according to my screen that I have right here, I'm going to explain using this context. So be it whichever indicator you are using, once you know the uptrend and the downtrend of the indicator, then you can just apply the explanation to that same setup that you have. Okay, it will just work fine. Trust me. This indicator right here, when it shows blue line like this, okay, it shows that the market is on uptrend. And when it shows the yellow line or the golden line, it shows the market is on downtrend. That is first thing about the line. That's first thing you have to know. The second thing is when it shows the gold circle, this 5 circle, okay, this signal 5. Once it shows the yellow, okay, you can see that whenever we have the yellow line, that's a downtrend. Whenever we have this circle 5 also, that is a downtrend. Whenever we have the blue line, that's an uptrend. Whenever we have the circle blue, that's an uptrend. Okay, now I'm showing this on a 5 minutes time frame. This indicator cannot be used for any lower time frame. Okay, it is more accurate when you are using it in 5 minutes upward. It is more accurate. Okay, now let's say you enter the market on somewhere around here. Let me mark it out. Okay, let's say you enter the market somewhere around here. Okay, you can see that the blue signal, the blue circle is out here. Then you are in it that this is going to go for long. Okay, maybe you didn't check your support and resistance, so you think this is going to go for long, that it has been on option for a while, so it's going to keep on going for some time. Okay, this is one bad thing that we need to stop while trading. Okay, trading is not a gamble. Okay, it is not a game, because when you lose money, it doesn't look funny, it doesn't look like you're having fun. So we really need to take it very serious. Okay, it's a business and we need to treat it as such. So let's say you enter at this point right here and you exceeded your exit point. Okay, maybe you are there for too long, maybe you feel too comfortable in the market, and unfortunately you get caught by this spike. Okay, now this is a huge recurring spike. You can see the first one, it covers about, let's say 1 2 3 4 5, about 5 candles or thereabouts. Then it repeated itself with the same candle, then with another longer candle, then with another longer candle. Okay, that is a whole lot of candles right here. Okay, for the market to climb back this kind of candles, it's going to take it hours. Okay, now if this kind of stuff, you get caught in this kind of crashes, how are you going to treat it? Okay, now this is crash, so it just opposite of the boom. Okay, just same thing. Now if it's happening in boom, it will just be a spike. Okay, so it's still the same thing when it crashes. Okay, you can call it a spike. That is like a spike when it crash in the crash market. So this scenario is still okay to explain it. What are you going to do? The first thing is you check your analysis. Okay, the first analysis you do or you did with this indicator, or whichever indicator that you are using, you check it again that, okay, am I still in the right direction? If you are still in the right direction, do not panic, okay? You can just hold on to your trade, and it's going to return you back to your initial position, okay? Once it returns you back to your initial position, it's either you wait for a little more profit before you close it, or you just take your you close the market and call it a trade. But what if it doesn't get to that point? Now, I said something about analysis. The support and resistance play a very vital role, okay? Let's say the market has been consolidating somewhere around here, okay? You can see that it goes up, it comes down, then it keep on moving here. So it goes up, come down, goes up, then it was playing around here, then it went up for some time. Then now it came down, okay? It came down, and we are waiting for it to go up again, because this is a huge candle, this is a huge depth, and if you are not very careful, you don't know the time is going to come up, so you might be panicking that, oh no, this is going to take too long. And if unfortunately or unluckily you don't have a huge capital to withstand all these kind of shocks, then it is going to crumble your trading account, okay? That is how people blow up their accounts immediately. So once a crash happens and it's a bit much, okay, you check your analysis again and try to check where the market is going. Now let me check the market in 1 hour time frame and see. Time frame, I just go to 1 hour. Okay, so in 1 hour you can see that this is what has been happening, okay? This is all the downtrend that we have had, okay? So you can see that in 1 hour this market has been up for so long, okay? It has been up for so long, and it has given the circle here that this is going to come down, okay? As you can see here, it has given the circle also that it is still coming down. So if stuffs like this happened and you are waiting for it to go up, then you must have a good capital, a sizable capital. That is the first thing, sizable capital, so that you won't panic and close your trade. But let's say you made the mistake, because people make this mistake of trading with the bad lot size, okay? When people set unrealistic targets. If your account is $100 and you are having the plan of making like $20 or $30 per day, it is not realistic, to be honest, okay? It is not realistic. There's no free money out here. This is not a game, okay? So you must be very technical, okay? It is better you are moving slow and steady, okay? Let's say you are making $5 every day, that's fine. So if you are able to make $5 every day for a whole year, now you are going to gain a lot more experience than try to make $50 in a day and crumble your account, okay? That will diminish the confidence you have in the market, okay? You tend to forget, or you don't have confidence in what you already know, and it is very, very bad for our own trading ethics. It is very, very bad. So you don't do this thing. So whenever you have your capital, you cut your quote according to your size, you reduce it. Okay, let's say for example your capital is $500. What is the best lot size you are going to use? I will advise you to use lot size between the range of 0.2, because right now 0.1 is no longer accepted. I don't know why they cancelled it, okay? But 0.2 up to 0.6, okay, that is fine. Because of or situation like, or because of unforeseen situation like this, whereby the market is going to go against you for a very, very long time. So you need to take that kind of precaution, so that when it go against you, you still have the confidence for it to come back. So first, if the signal is out, if you don't know how to use this indicator, you can check my channel. Now do not forget to subscribe. I create videos on how you can trade the synthetic indices and forex trading and make money from it. So if you don't know how to use this indicator, you can check it right here. I have some videos on it, the 5-minute strategies and all of that. Do well to watch the video. It is very, very educative, and it's going to help you a lot on how you are going to make some money. So let's say as the market we have like $500, okay, and we are using 0.2 lot size, and the market go against us, we still have some confidence that we are going to exercise, okay? So let's wait that it's going to go right up. So if it doesn't go right up, then maybe our analysis must be wrong. If you have a trading pattern Okay, you don't just enter the market and scalp for long, that you are scalping for a very long time. If you don't have huge capital, you don't scalp for long. You follow the signal, you enter when you are supposed to enter, you exit as at when due. Let's say the signal comes out that the market is going to go up. Okay, it's going to go up. This is blue signal right here. Okay, let's say this is 5 minutes and the signal is out that it's going to go up, and we always know that whenever the signal is out, the first candle is always a full candle. Most of the times, let's say see the blue here, the first candle is full one. The blue here, the first candle is full one. So it's always like that. Most of the time it's full candle. So let's say you are trading the 15 minutes time frame and it's showing that the indication is showing that it's going uptrend. Okay, that this is going uptrend and you're in the crash market, and that is the best time to sell, to buy. Okay, that's the best time to trade your crash. Then you enter the market. Okay, and the market is in 15 minutes time frame, but you've targeted and made a kind of trading pattern for yourself that you're just going to take only 5 minutes out of it. Once you take your 5 minutes, okay, you can use the candle timer. Once you take your 5 minutes, exit the market. You don't have to wait for anything. Don't be too greedy. Okay, this thing can be sweet. Okay, this is money and it's somehow addictive. It can be sweet when you're making the money, but once it goes against you, your emotion will start crumbling, and before you know, things might go wrong, which is not what we actually want for any of our students right here. So I advise you guys to use a good lot size. Do your analysis, follow the signal. If you must trade for long time at all, because most of this thing happens in long time trading. When you are trading for long time, when you are scalping for 5 minutes, 10 minutes, 20 minutes, this is what results into it. Okay, so if you are going to trade for long time at all, if you must, then you must have a sizable capital. It is very, very important. I can't stress that enough. A sizable capital. Use the best, okay, lot size, so that whenever things go wrong, it's like having using the a small lot size, which is okay for your account. It's like having a contingency plan, that what if things go wrong, how is my account going to fare on with the negative or direction of the market. So you must consider all of this. So you use the best lot size, then set a realistic daily target. Okay, a realistic daily target. Many people out there will tell you you can make up to 30% or 50% of your portfolio or of your trading capital in a single day. That is far from the truth. Okay, this is not a means of earning free money. So you must not have this kind of mindset. Okay, don't have this kind of mindset when you are coming to trading. Okay, so that you not get disappointed, or you won't just keep losing or blowing up your account. So thank you guys for hanging on. Once again, I thank you so dearly for reaching out, people that called, the messages, and all the love that you showed me during the hard time I faced. Thank you all, and now I'm back fully, and I'll be dropping video for you from time to time. So thank you and bye for now.